Ladies and gentlemen, the Hive is live. Bring your vision. This is how we build 1 million cups.
What's happening, everybody? Good morning.
1 million cups.
Good morning, good morning. Good morning. Yes, and you too. Yes, good morning. Oh, good morning. I think I need a hug. Awesome. We're super excited to have you all here. Thanks for coming today. Thanks for telling your family and friends. They're showing up, and we appreciate that. So I wanted to get right to it, but first I wanted to give a little shout out to Dr. Kim Fries. She is watching from home. Everybody give a wave. Hi. We're missing you, but she says she's going to make her best effort to be here next week. So we'll all get to hopefully see her next week. But today we have something awesome and I'm very excited about, which is it's access to capital. And we're going to have a panel up here. We get to there's some I think some presentation that will be part of it, but also we just get to throw all our questions at them and get in the weeds a bit today. So I'm really excited about that. So without further ado, let's introduce our panel today. So we have John with Business Oregon. Come on up, John. We have Autumn with IVCanDo. Come on up, Autumn. Stephanie with Craft 3. We have and Shelly and Brian from WaFd. Come on up. And the mics all have switches on the bottom. I'll let you guys see. If you need technical assistance, I can provide some technical assistance. Yeah, it's right there. All right, well, First off, thank you all for being here today. Really appreciate the time, the energy. I know that this is one of the most requested topics that we have here in the room. It's also one of the toughest nuts to crack, and oftentimes something that we as entrepreneurs don't have a lot of insight into how the mechanics work and how we can access funding. So I'll let you take it away from here. And I do have a lot of questions myself. So when you get to that point, let me know. Let me know, Brian, when you want the slide up on the screen, or if you just want it now. So, okay, awesome. Big hand for our panel.
So yes, this is a slide, what were we here a month ago? Anyways, this didn't get up last time, so I thought it might be helpful just to have a visual. So as a bank lender, I'm a relationship manager, kind of in partnership with Shelly, who is at the branch. And so we do get a fair amount of, people just coming in asking for, how does it work? What can I qualify for? And so this is kind of just a little bit of a rundown of where you should be. So first off is having some financials ready. You'd be surprised how many people come in and don't have their records in order, and that's for a bank. That's what we rely on for underwriting. So we got to have paper, and then just having kind of an idea of what you're looking for. There's at bank financing. There's a relatively limited set of options that we have. So I think we talked about this last time, but thinking about short-term financing versus long-term, kind of having an idea of what you're looking for. And then I've got the 5 C's of credit. So it's a schematic or, just kind of a way of looking at loan requests that every bank pretty much utilizes. So I won't go into the detail on that, but something to familiarize yourself with. That's all I really have. I don't know if, Shelly, you want to add?
Of course I do. So, WaFd Bank is an SBA preferred lending institution. With our SBA product, you have to be in business at least 1 year. You have to have a minimum credit score of 640. The rate is prime plus anywhere from 3 to 5%. Right now, prime is at 6.75. So 6, 7, 8, 9, 10% is most likely the highest that you're going to pay, which is really, really good money for SBA. There is no UCC filing. It's completely unsecured. If you go over 50,000, then there's generally a blanket UCC filing. Fees, 2%, which isn't too bad, and that's a one-time fee. There is no annual fee. We do have to have your operating account, and the purpose of that is so that way the interest-only payments can come out of your account once a month. We also have a fixed one for those that don't care for a variable rate, and that one can go up to 10 years. Still a 2% fee, and you still have to have an operating account. Now, you do have to provide your first page of your taxes, so that way we can send it off to the government, so that way they can compare your information, tax ID number, name of business, all this good stuff. Kind of works like a 4506T. So we do have to have that. If you file an extension, I have a business now that I'm working with, and they had to file an extension, so we have to have a copy of that extension too, because it all goes to the government. The loan can take up to 4 weeks because it is SBA, and we do rely on the government for that. That's all I got.
All right. Thanks, Shelley.
You're welcome.
I'm Stephanie with Craft 3, and Craft 3 is a nonprofit lender. So we do business loans, but we're non-traditional. We're an alternative to a bank loan. And before I was a lender, I owned a small bakery in Ashland. And I remember there were times when I couldn't make payroll. Not because we didn't have a successful business and we had revenue of over $1 million a year, which felt like a lot, and then I couldn't make payroll. So we had cash flow issues, along with lots of other issues, equipment issues, you name it. And I remember going to my bank and being like, hey, this is how much money I make a year, and not being able to get a loan, and having no idea that there were non-traditional lenders out there. Anyway, after being a banker for some years, and then finding out about community development financial institutions, which is CDFI is what you'll hear people talking about, I thought, that's what I want to do. I want to be able to do loans for small businesses locally that are having a hard time fitting a bank standard. And our banks are important. They're very important. In fact, if you can get a loan with the bank, that's absolutely where you should be. You're probably going to get better rates there, et cetera. But if you're not fitting all of those boxes, a place like Craft 3, and there's other lenders as well that are non-traditional lenders, is a really good place to look. We can do loans even when you have poor credit, when you've had a bankruptcy in the last few years, when you don't have enough collateral, that's a big one, when your cash flow is iffy sometimes, but you know that with this loan or this new equipment or whatever it is that your business is going to be more efficient and have a better net income, like we'll want to look at those projections. So Craft 3 is a good place to go when your banker tells you no. So, thanks.
Thank you, Stephanie, and thank you, Brian and Shelley, as well. My name's Autumn DiLorenzo. I'm with the Illinois Valley Community Development Organization. I'm here, of course, to talk to you about our lending opportunities that we're here to offer. I'd like to first tell you a little bit more about our organization and what we do. So we're a big picture nonprofit. We focus on promoting sustainable development for economical, social, cultural conditions here in Southern Oregon. We like to refer to ourselves as IVCanDo for our can-do spirit, and we like to apply those to all aspects of our business and our partner relations. We have a revolving loan fund, which is designed uniquely for small businesses and entrepreneurs. And the term revolving refers to the interest that you are paying in that loan going back into the loan pool so that we can continue to provide support to other small businesses and entrepreneurs within Josephine and Jackson County. Although we're headquartered in the Illinois Valley, our outreach does extend to Jackson County as well. Our loans range anywhere between $200 to $25,000. So if you are starting a business and you're looking for a larger chunk of capital, or you're a business owner looking to expand or just upgrade your inventory or your tools, this is what our loans are designed for. Our interest rate is locked in at 2% above the national prime. So right now, if you were to lend with us, that would be locked in at 8.75%. And our terms are anywhere from 36 months to 60 or 5 years. Let's see, I got my little notes here. Since the inception of our revolving loan fund program, we've redistributed over $2.3 million back into the community. And in 2026, the city of Grants Pass had decided to put together an economic development revolving loan fund. So they helped give us some capital to disperse into this city. And since then, we have lended to 18 different businesses and distributed over $350,000 into this town. So as some of these other lenders have stated in terms of what you would need to apply, we do look at your finances. If you are a business that's been running already, we love to see those projections and your history. And if you're a startup, we work very closely with the Rogue Valley SBDC and refer most of our applicants to them for support. So if you're unfamiliar with business finances or if you need some help developing a business plan, they're an excellent resource that we're lucky to still have within this community. And if you have any questions for me, you can contact me directly or come see me after this. I've got some flyers and business cards that I can hand out, and I'm happy to hear about your businesses and answer any questions you have. Thank you.
So a lot of great information here. I'm John Stalin with Business Oregon, and then we also have Christy Stockerbrand in the audience. We're the two business finance officers that get to cover Southern Oregon. Business Oregon is the state's economic development agency, so we're, again, a non-traditional type lender. But we do have two separate types of programs. So we have direct loans and indirect loans. Direct loans come directly from Business Oregon. They can be from $25,000 up to $1 million. We also heavily rely on the technical assistance providers of the SBDC if we're underwriting to a business plan or projections for a startup. If we're using an existing business, we'll look at historical financials, but then also spend a lot of time with you guys getting to know your business and working through your financing needs with that. And then the indirect program is similar to like a state-run SBA type program where we can do loan insurance programs up to $6 million. All of our loan programs can be used for working capital, equipment financing, real estate acquisition. So there's 9 different programs in totality that we run. So we probably have something that might fit your guys' needs. And Christy or myself would be happy to talk to you guys if you have any further questions.
Questions? I know that was a lot. There was a bunch coming at us. I guess, do we have anybody who wants to ask questions?
My question is for Autumn because you mentioned the SBDC and I know there's been some changes. Could you enlighten the audience on what's happened with SBDC? I know like they closed part, but you're saying that is still available for services. Where, who, and how do we access that?
Of course, yeah. So the SBDC did go through some changes. They were operating under RCC, and now they are independent. You can find them in the Owl Plaza. They're opening up a section there. Kendall Hochep and Karen Remarino are the two providers that will be here for Josephine County Grants Path. And right now, everything for them is provided online. So while they're setting up their business hub area, you'll have to set things up. I believe the email, actually, you'll have to give me a moment, but if you want their contact information, I will look it up. You can find me after, and I'll provide that for you. Jackson County, there is an SBDC program through SOU. And so I know that some of those individuals are operating strictly SBA, SBDC, and then there's also a peer program as well. Both of those offices can help anyone with their business financing support.
I'm currently emailing SBDC right now, and I'm just curious if they're moved away from RCC, would it not still be SBDC at Rogue Community College?
Correct.
.edu? So the email would have changed?
Where is it?
Well, or we can have
Yeah.
send it out.
Yeah, thank you. It looks like there's support at OregonSBDCNetwork.ccsend.com.
Support at SBDC Network.
Support at Oregon's SBDC Network. .ccsend.com.
Gotcha. Thank you.
Thank you.
Any other questions?
Hello. Do you guys work with coaches or other groups or individuals to help create advantages for organizations, whether it is to help secure their ability to repay or adhere to a business plan, or to help prepare them to better be in a position to receive these types of loans?
We are their coach.
Does that work?
Financially, we're their coach. If you have a client that comes in and they're not able to qualify for whatever reason, and I don't have somebody to send them, then I work with them to help them get their credit or get whatever they need up.
How does that work? I mean, does that work well?
It does work well. It takes years to build credit. It takes a nanosecond for it to go down. So a suggestion would be a secured credit card. Get a secured credit card, work on that for a year. It doesn't happen over.
But what about character? Do they don't have the character, and so you just pass them along, or do you coach that too?
You can only help those who will help themselves.
Are you asking, I just want to make, for clarification, are you asking if we work with like a third party that's like a business coach to them already? And
Or refer them to one?
got you.
Like, do you guys see that as a resource tool, as part of like for lack of a better phrase, like a circle of care for helping organizations get the capital they need? Or even secure your investments in them?
Yeah. I think that's really important. I've definitely needed my coaches throughout. Like what they were both talking about, the SBDC, I definitely refer a lot of people there. And then within Craft 3, we also have a very small department of 2 that's called Business Services. And so we will help with those types of things as well. But if a startup business is super green, new, then I usually refer them to the SBDC. But if there are other business coaches around, like, I'd love to get to know you, because I know that the SBDC sometimes gets really busy and they're great at what they do. Yeah.
Thank you.
Well, and also to piggyback on that, some people, there's just nothing I can do to help them. But I surround myself with people that I can refer them to that can help them. Is that fair? Okay.
So I have a question regarding the similarities between business loans and home loans. What are like 3 similarities that you guys would draw in those categories of what do they might have in common?
So I think at least whenever I do a business loan, I'm actually going to look at the same things that a mortgage lender for a personal loan does. So so that part's going to be the same because I'm going to look at what we call a global picture as well. So like your debt to income ratio and your credit score and the loan to value, those are all things you're going to find in both a commercial loan and a residential loan. But then we're also going to do the same, except a little more in depth, look at your business and the industry that your business is in and things like that. And so that's one thing I tell people that haven't had a business loan yet, like we're going to dive deep. And so it can be a little bit more painful than a mortgage loan, unfortunately. But to get the full picture, we have to see all of that.
Out of curiosity, what would a DTI, like a debt to income ratio or LTV loan to value, be for a business loan?
So we'll look at your personal debt to income. That matters. And so that's all of your businesses, all of your loans. I mean, your credit cards, your home loan, et cetera, car loan, to your income. But then we're also going to look at it's a similar type of ratio, but it's a debt service coverage ratio. So it means if you have other business loans out there, we're going to look at all of that monthly debt for those loans. Maybe you have a business credit card and maybe you own your business, but you have a mortgage on that commercial building, let's say. So we want to look at all of the debt compared to your, we'll go with net income, which we look at as like EBITDA, but it's like your net income, it's your bottom line. Yeah.
What would you say is like the usual like loan to value that you're looking for? Like you don't want someone to be totally in the hole, of course, but what's like the user percentage that they're coming in at? Depending on, I suppose, the discrepancy could be the loan amount, but generally, where do you think the person should be at with that loan to value ratio percentage?
And we're going to all have probably a different answer for you for that.
Fair.
For me, I technically can do 100% loan to value. So and I can even go higher than that. My loans are not, we always want collateral. Don't get me wrong. We always want to try to get all the collateral we can get. But I can do loans with essentially no collateral, totally unsecured. But everyone's going to have a different answer.
Yeah, we want collateral. It depends on what we're financing. So if it's something that's readily marketable, we might have a higher advance rate. If it's something that's very highly specialized, it might be at a reduced loan-to-value rate. So it's a case-by-case basis. I wish I had a more firm answer for you, but it really depends on what we're looking at.
Okay. Cool stuff.
Great questions.
Hi, thanks for being here and doing this for everybody. I know that access to capital is such a sticking point for a lot of people. And my question goes to financial literacy. So what I am seeing frequently, I work with Kim, Dr. Kim at the Innovation Hub, and there is a lot of times a fundamental lack of financial literacy. So my question is in regard to your organizations or your resources, are you aware of any ongoing programs that help first educate people on the basics of fundamental literacy and then move them into more of what their options are based on what they know to be true for them?
I can take that one if you guys don't mind. I teach financial literacy for Access, and it's called Realizing the American Dream. I teach Money Matters and Credit, and Access teaches the rest, through different lenders and realtors and that sort of thing. And I know Sophia is going to be working with an organization here to teach financial literacy to special needs. And so that's something that I have an appetite for. So if you ever need that, please reach out. We have a conference room. If you don't have a place to meet, please reach out.
Absolutely. And I think, that's something that I would like to see if we can't get going for people, because I think so many people are intimidated by this topic just because they don't even have the groundwork to understand how any of this operates. And we're talking income to debt ratio and all of those things. That is Greek to a lot of people. So yeah, that would be great. I'd love to talk with you more about that.
Perfect. Thank you.
I'd like to piggyback on that as well. I've noticed in the last year that a lot of local government and chamber groups have been creating a series of workshops for small business owners, and typically one of the first or second of those workshops will touch base on financial literacy. That's not something right now that IVCDO does specifically. Of course, we do rely on the SBDC for that often, but when there are applicants who really struggle with that and they've found the process anxiety increasing throughout looking for lending, if they do happen to get approved with us, we'll oftentimes write in the condition of the loan that we check in with them monthly or every other month, depending on what they need, to meet with them, to meet with their SBDC advisor, to go over their financials and help make sure that they really are getting comfortable and have a good understanding, because it's important to us that everyone who lends with us is set up for success. So if you're looking, I would say definitely check your local chambers to see what they have going on.
If I could, this is loud. 90% chance of failure for any entrepreneur within 3 years. And usually the 10% that make it have failed before. Money is an important thing, but so is product and so is marketing. And it can take you 3 to 5 years just to get enough, stuff going, and you may need to refine your products. So even if they get money, if they haven't put in the time and if they're not at the place where they need money, where money's the need, as opposed to product and marketing, how do you estimate that? That yes, they've got a house, they've got a motorhome, they got property that they can put behind it, but they don't have a product and they don't have the marketing, and it's probably going to fail, and that loan is going to lose them a lot more.
Lots of risk. Lots of risk. There are people in this room that can give coaching on how to do things outside of what we can do.
So you're absolutely right, and it's not, owning your own business is not for the weak at all. So be really proud of yourselves if you own your own business, and especially if you've made it past year 3, congratulations. You're absolutely right. So that's part of too why we want to see a good business plan, and why we want to see good financial projections. And they have to make sense, and they need to be realistic. And I think that is why it's so important to get help with that, because you might be amazing at making bread and not quite be as amazing at some of the other things we're talking about, financial literacy, et cetera. So we're going to do a lot of investigating when we look at that business plan, and some businesses are easier to take a look at than others, like a coffee shop. I mean, I've done I don't know how many coffee shop loans, but if you're selling some kind of new widget that you've created, I'm going to have to dig a lot deeper because I don't know anything about that. So I have to try to become an expert real fast in that industry. So yeah, and then I don't know. The first thing that I look at that I say to myself with all my loans is do no harm. So the last thing I want to do, and that's oftentimes when I do have to turn down a loan, which hurts, I don't want to give you a loan that I don't know, that I'm not pretty confident about that you can pay back. Because like you said, I mean, that hurts more than just your business. you are putting a lot behind that, your house or perhaps your car or something, you know. I don't want to give you a loan if it doesn't really make sense. So having a good business plan is really helpful.
I had a friend in Dallas that actually invested $1 million and lost it. And that affected his family and his psyche tremendously.
So I helped a business, brand new business. I hooked him up with a CPA. I hooked him up with credit cards. I hooked him up with payroll. I participated in an event for them. They're not ready for lending, but I've given them ideas on what they could do. And I also introduced that person to this business to a coach who can help them with any other things. And so we don't do predatory lending. That's just as simple as that.
Also, to address the risk for startups, oftentimes at IVCDO, we do see people who are looking for or not getting approved by traditional lenders, and they'll be in a position that does have a lot of risk involved. And so underwriting, like Stephanie said, you have to become a detective real fast and get to know their business inside and out. And oftentimes I find that brings up a lot of questions that in turn help both the applicant and the lender discover a path for them. And so if they're at a point where lending is not something that we're confident in for them and they can't handle a repayment schedule, we rely heavily on the power of partnerships and community to connect them with people and places and opportunities that have lower risk. They might be wanting to start a food truck and they can't take on capital and a loan term, but we can hook them up with people we know who run farmers markets or might have a resort somewhere where they can set up for really low cost and just get the ball rolling so that the community begins to know about them and they start to get their income in and they start to understand their financials so they can maybe come back to us in a year and say, I'm ready.
Awesome. Yep. More questions.
Hey everyone, my name's Cody Goins. I work for Evergreen Federal Bank, not on the panel today. Thank you, fellow bankers. You're the fellow boring people here that show up with these creative, awesome entrepreneurs I'm inspired by you guys every week. This is Radule, one of my colleagues. He's also a loan officer. We haven't been going here very long, but so Evergreen also does loans. We're a little more vanilla in the types of loans we do. We do loans on real estate, so secured by real estate. So if you want to talk to us, we'll be sitting here for 5 or 10 minutes after this thing. To answer the gentleman's question over here, 25% we want to see. So we want to see a loan to value of at least 75%, and maybe lower depending on the collateral. And then for the global cash flow, we want to see at least 25% cash flow. So essentially yourself and all of your debts, all of your cash flow over all of your debts, we want to see 25%. And then if it's a building you're purchasing to rent out, we want to see that building cash flows at least 25%. So 25 is the number to remember for you, sir. But yeah, come talk to us after. Thank you.
Thank you.
Maybe just a bit of a, different question or curveball or something like that. But we're Babbage. We've been in business for about 6 years. We're a local software company. And we have a for-profit aspect to certain stuff that we do, where we build stuff for clients and they pay us and we ship a product or an app or a website, something like that. Another thing we're doing is starting to maybe branch off into another area of like nonprofit, where we have this desire to have a community impact and to connect with more people in the community locally, to educate and to teach people, give them the technology skills for like maybe technical literacy in universities, offer an alternative for like elective credit in university courses, things like that. But there's costs that we have in doing that. So we have our MetaNet Academy and students go and learn and whatnot. My question is what are the best resources out there in terms of capital that can be aligned towards more of a community impact? So, for example, one of the bottlenecks we've faced is, we have costs associated with operating our our educational programs, and asking university students to bear those costs wholesale is tough when we need to, grade their things they do and whatnot. So like, what opportunities exist and what are the best resources or maybe some jumping off points for discussion that we can engage with in terms of bringing the right capital in that could, like, for example, subsidize a student going through a program to build that skill and then to have that measurable impact in the community, and to kind of mobilize capital towards that type of impact through some of our work. And what advice do you have in terms of, we have this for-profit company and we're doing some of this stuff that way, right? But also starting to maybe branch off and create a nonprofit aspect to things. Sorry for the long and rambling question, but that's curious to hear you guys' thoughts on some of that stuff.
Okay, I might be able to touch on some of that. While you were asking that question, it brought to mind an example of one of our recent borrowers. She needed funding to finish her education for microscopy. She uses her microscope to do labs for smaller, what is the word that I'm like, well, smaller health organizations. And when it comes to our review process, not only are we looking at all of your hard data, but our C's for credit are 7, and it also includes character and community impact. And so although this person isn't starting their business right away, we know that if she got funding to finish her education and therefore start her business, she could help more of the holistic healers within Josephine and Jackson counties save costs on their labs. Instead of going to a big lab service, they could then go to her and she can come and handle that process a lot faster. I think maybe that might have touched on in terms of supporting the community aspect. That is something that IVCDO does look at greatly.
Thank you.
I'm not sure if this directly answers at all, but I think when we're talking about access to capital, it's not only loans that people need. Sometimes they don't need a loan. What's not on this panel today, because we're all lenders, are things like investors and angel investors and grants. So there are other ways to access capital. And I heard someone say once, like, access to capital isn't only a loan to a business, it's the opportunity for a good business to become a stronger business. And I think that's really important. It's not just loans.
I love that. I appreciate you bringing that up because, so we did label this access to capital. Probably should have been labeled access to financing, right? So this is an expert panel on financing. Other pathways to capital are funding, right? So financing is debt. Financing is something you have to pay back. Funding is capital you don't have to pay back, but you typically trade equity or some type of ownership, or there's other ways of trading, right, with an investor. There's also forms of funding that you don't have to, don't dilute your equity, like grants and things like that, right? So there's a lot of different types of capital that you can access. We have experts on financing here. A question I have for y'all is, do you have wells that you can dip into when somebody comes to you and financing may not be the right thing, but do you have directions you point people in when it comes to funding or grants? Are there programs or money that is underutilized in our state or area that people just don't know about access to?
I personally, whenever I talk to someone and they are looking for a grant, and I know Sophia does the same thing, we try to find somebody that can help them write a grant. I mean, that's overwhelming. And any kind of ideas that we have, we throw that out there.
WaFd itself, we actually do have a nonprofit arm that has a fund, and so that's not. It has specific objectives, so you have to fit, a box for what they're looking to invest in. But it's grant money that we give out. It typically goes pretty fast, so I wish we had more, knowledge of other. But a lot of banks do have that. So if you're a nonprofit or you have a specific community need that you're meeting, banks do have other funds that they can give out.
Yeah, there are some other areas, or these are covered in other areas of the state. Unfortunately, the Southern Oregon Angel Investor Pool has since closed down, but there's been Venture Conference. The SBDC also has a capital access team, and they have some advisors on there that previously ran, VC type things, and they still have connections to those networks. Again, so SBDC can be a resource to go to those things to find the capital, to access that capital. It's important to just within your industry that you're looking to do is try to find that avenue. I don't have all of them, but if there's one that I can help with, connect one-on-one, and we'll see if we can get somebody that's in that industry, whether it's food and beverage or, software or whatever it is, that might exist somewhere else in the state. Be happy to try to do that for you guys. I know it's tough.
Well, and also for nonprofits, we like to volunteer. We like to go out and help them with whatever they need, not just funding, but I don't know, financial literacy, mow lawns, paint buildings. So we can also do that as well.
Me again. So I am a coach, and often, as much as I would love for somebody to say, I'm anticipating problems in my future and I'm going to hire a coach in advance to get ahead of those problems, usually they come and find me whenever they're in crisis and they need help today, but they have cash flow issues, so they can't hire me today. And so they're in this position to where they're figuring out, well, when can I hire you? I want to make this a priority because I can't break the cycle I'm in until I get some sort of coaching. And but they don't have the cash flow to make that happen. But they're typically good businesses in the sense that they have a product, they have revenue, they have, everything's functioning to some extent, but when you get in there and you can clean it up, you can fix those cash flow issues. Do you guys have lending options, especially for service businesses that don't really have collateral? Ranging anywhere from maybe a few $100s to $10,000 to $20,000, where they could repay these fairly well with the fixed cash flow issues. It's almost like a plan, develop a plan of this is the projection of what the correction would do. Do you guys look at that as is there any funding options for that person for services like that? Maybe not even coaching. Maybe they need payroll help or something, HR help to clean up their cash flow.
We do, yeah, absolutely. The hard part with Craft 3, it's not hard part, but our minimum loan size is $50,000. So that is, so if it's smaller than that, then you're probably going to be looking, at another alternative lender. But so we can absolutely wrap in different working capital needs. That can be payroll, that can be marketing. I actually haven't had someone ask to put coaching in there, but absolutely it could be a part of it. So, yeah. So we definitely can. It can be like a working capital. It just has to make sense, and I think everything you just described makes sense. So, yeah.
Yeah, as long as when I see applicants who are struggling and need that little boost, again, we loan from $200 up to $25,000, so it's smaller amounts in terms of comparisons to traditional or bank lending. But it has to make sense. So I'm going to look at someone's business plan and say, why do you need this? How are you applying it? Are you comfortable with checking in with me so I can know how it's going, you know? I'm very much invested personally in how everyone is doing, and I want their businesses to succeed. So we have the opportunity to be able to write that in and make exceptions, yeah.
And same thing from the Business Oregon, everything that they already said. We're kind of in the $25,000 space, but everything that the panelists already mentioned too.
I'm kind of curious, is there like a formula that one wouldn't know about to find an angel investor?
We need more of them, right?
Angel investors don't raise their hand typically. No, but there are formulas for it, and some of those formulas are some of what we talked about today. Like, I would venture to say that each of these people have people that they might refer someone to that might invest in them. But that's a fit thing, right? It's a fit. It's all these C's as well. It's like character is a piece of, there's a lot of pieces to being referred to somebody who may fund your venture. It is networking. It is going to Rotary. It is all of those things. The more you expose people to your product, to the company that you have, the more touch points, the more somebody's going to go, that's interesting. I want to see that win. I believe in you. Those are the things, right? So the formula is showing up, refining your product. There's also another form of capital that I didn't mention. It's probably the most important one. Anybody know what that one is? Working capital. It's the kind of it's money coming in that you have to work with in your business, right? This is the traditional form of bootstrapping your business, where you are actually generating revenue and that revenue is growing, and then you're reinvesting that revenue in your business. That's the best kind of capital you can have. Oftentimes I've found businesses that I've referred to financing where that fits really well is when you actually have something that is working and you are generating that revenue, but you need to grow. You need to buy that next machine. You need to like expand your business in some way because you have something that's working and now it's time to scale it up a little bit. And they love those loans, by the way, because you have working capital, you have a business that's penciling, and literally when you see it's like this machine allows us to go from this to this number, and that formula works, all day, every one of these people up here will give you money happily in that situation. So I think what I'm hearing is that there are a lot of questions around funding is a big question mark, and it's a hard thing. And it also, funding doesn't have people like this as readily available. There are some, and we're going to be bringing some down from Portland to come talk with us, the Oregon Venture Fund, and some others. And so that's cool because those are people who are part of funds that will tell you the formula, that will help you understand exactly what it is that makes you look great to them. But what we have is, again, like, this is great money. Why is this great money? You don't give up any of your business to have it. Funding is money that you have to give up, ownership of your business typically, to have it. So there's trade-offs there. So if you can make this kind of money work for you, meaning like the loan works and you can leverage that to get to the next step, and it all pencils and it's not just a hope and a dream, then this is incredible money to get, right? So that I think like we do have a lack of just feeling connected to understanding how our finances work as a business owner. And I think we need to get over that because we have people like this that will happily sit with you and discuss where you're at, what you need to be at to work with them, and then also other resources. And they can help. They're a good starting point because if they can't help you, they can refer you somewhere. So, yeah. Did you have anything to add to that?
Well, just one piece that I would share is I think a conversation with a lender is a great place to start. I think one thing that we have access to, and it's different at every bank, is that we're working with businesses that are actively seeking loans. They're selling products. You know, they're doing the things. And so if you're trying to get your venture off the ground or to the next level, it's a dialogue, you know. And so you can understand the bank's standpoint, understand the things that we need to see, and it takes time. There are a lot of resources. I mean, I wish investors are harder to come by in this area, but I think we all want to help. So just having the conversation is usually just a good place to start.
Well, and I have one thing to add. This is a personal story, not me personally, but for a client. You know, I made a call to a business way out, and I'm like, how's your cash flow? Well, you know, I needed to buy a truck, and they wanted so much documentation, I just said to heck with it and paid cash. And had we had the opportunity to help him, he wouldn't have had that experience. That's just, that's a fact. And all y'all need an operating line of credit. Every business should have one because it helps in those times.
The only thing that I was going to add is just for you or a friend or anybody that you know that's looking to find out more about a loan, we all work really well together. So we refer to each other. So Ready is in the house as well, and they have loan programs. So if it doesn't fit for one of us, we're gonna send you to one of the others of us. There are so many different types of programs, and we just kind of scratched the surface today. But we all work well together, and we're not competing against each other. Like, we really want what's best for you and your business.
Well, and Oregon Business sent me a deal that they could have easily done, but the rate was so much higher. And so they sent it to me, and unfortunately, I'm still working on it.
Keep working on it.
But we're not greedy. We're looking for what works best for each person on an individual level.
And also just to continue to do what you're doing today. Show up, go to these events, meet people, network, talk about your dreams, talk about what you're doing. Find pitch nights, find innovator hubs, find workshops. Get out there, expand your net, just keep pushing pavement. You know, the energy that you're putting into this is going to be rewarded. And when you speak to people like all of these beautiful panelists here, we're going to do our best to connect you with anyone we know who can serve your purpose.
Yeah, all of us live here, we work here, we want to see this community thrive. I would just, to back up kind of what Brian was saying, is, start the conversation early and often if you're looking for something. I had a business coach tell me, he's like, sometimes telling someone a no is a win for the business when you're asking about risk and other things. So, but for us, it's a not right now kind of thing. We don't just say no and shut the door on you and say best of luck. We try to connect you guys with resources or continue to look at things. If I have to say no or not right now, we're going to say, let's look at these three things and then reassess it or something of that nature. So I would just say to have an open dialogue, have an open mind. Business lending is, I guess, kind of intensive, for things. It's not just going to be like, hey, I want a working capital line of credit. Here's 25 grand and you're off and running. We are going to look at things and ask questions and need to understand your business. But please don't get frustrated.
Awesome. Thank you so much. Again, please leverage this resource. Even if you don't feel like your business is ready to finance, they'll tell you what the gap is, right? They'll say, oh, you're here right now. This is where you need to be to qualify for this. And go talk to this person, right? Like, that is all information. That's what we need the most, is more information, access to that information. So they're offering it. Let's have a big hand for our panel today. Thank you all so much. We will, as we have openings in the fall, we will come back to this topic. We'll come at it from a different angle. We'll talk about some other sides of capital and access to it. And we are working to get some people to come into our area that are actually part of funds that can actually address some of those topics for you. And then we are working to put together, we've done some, we've conducted in the past, like I'm talking years ago, we actually had pitch contests here where there was funders in the room. More recently, we've done some pitch contests so that people can get some, get some under their belt, pitching under their belt, I guess, and some advisement and whatnot. And there's been some fun to that. We plan to revisit the pitch contest as well, and again, try to bring credible money into the room that even if there's not an investment made, the feedback that you get in those sessions is incredible. So thank you all for being here. I hope you got something out of today, and if nothing else, get business cards and do go have the conversations, right? And maybe have conversations with more than one, right? Some will have information that others don't, or know someone that fits what you're doing and can make a referral to you that others can't, right? So there's a lot in this room. Share the information. Thanks for coming out. Big hand for yourselves. Come on. And we will see you next week from 9:30 to 10:30 on Wednesday. Have a great week. Oh, you get something, though. I do have something for you, but...